So I decided to turn the camera on, get everything rolling. I'm just going to talk about the charts today. Nothing special in this video. I just really want to talk to you about how trading is a lot more simplified than you are actually understanding right now. Let's go over to the charts and I'll show you that it doesn't have to be complicated to trade. In fact, it can be very, very simple. And all we're going to look at today is those candles on the chart. We don't even need to look at anything else. The candles will show you everything. So I'm on the EUR/USD pair on a 4-hour time frame. And what I want to really just take away from this video is to understand it is a lot more simple to trade than what you may well be making it. You don't need to have all these complex strategies. You don't need to make it complicated for yourself. At the end of the day, a 5 or 6 year old could trade once you start understanding what I'm going to share here today, reading the candlesticks, understanding what is happening. So we have on any market, okay, any market, any type of market, whether it is a Forex market, the stock market, you're going to have the markets move in different stages. And what I class them as, we have a balanced market and an unbalanced market. That is all they move in. So what is a balanced market? A balanced market is quite simply when you're going to see a market looking like this. This is what we call a balanced market. There are other terms that people use for this: range bound market, choppy market, consolidation, but they all show the same thing. This is a balanced market. Now we can see balanced markets like here as well. This is a balanced market. Okay, even this move up here is a balanced market. This is a balanced market. And even smaller moves like over here, this is a balanced market. So once you understand the difference between a balanced market and an unbalanced market, this is where the key term comes in for you to understand how to read the markets. Let me just remove these off. So that's the balanced market. What is a unbalanced market? An unbalanced market is just the opposite. And it's going to show you these large momentum moves here in the market. Look at the way the market pushes up here. Now we can see the same as the market goes to downside. We have an unbalanced market. So the unbalanced market is where the market's making that momentum move. Again, you've probably heard different terms for this. Momentum in the market, bullish market, bearish market, trends in the market, you know, all that sort of stuff is just to give you different insights in the market. And all of it together is what makes it complex for you. You don't need to be complex. You're like, oh, what's the market doing here? Are we pulling back? Are we doing consolidation? Are we going to do a reversal? Hey traders, we'll get back to the video in just a moment. But I want to give you a gift for hanging out with me today. I want to give you my free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate more profits and the steps to building a profitable strategy for yourself. Look, you don't have to spend a lot of time on this. It's about doing the right things in the right order. And it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. This is what makes it complex. It doesn't need to be like this. Let's go through this chart and I will show you really the best way to read a market. So from here, we have this push up. So let's just arrow this up. So we have this push here up in the market. This is showing us it is an unbalanced market. Why? Well, after we have the close of this candle and then we have the next candle, or even the close of this candle before this candle closes, it shows me we have a push up. The same with this candle here, which shows to you that we have a momentum market. And once we have this candle close, we're going to have this area here left over. Before that, we have this area left over. This is what I class as a unbalanced market, and it is an area of imbalance. So there's an imbalance in the market, and very often you're going to find these imbalances are going to be left behind and leave a small area, just like we can see here. That is an area of imbalance. And we see the same thing again. We have another push up, which shows us another unbalanced market. And again, we have a balanced retracement. And then we have another unbalanced move to the upside. And once again, another unbalanced move to the upside. So this is just showing you that we have a bullish market right there. And even when we see the balanced market sections like here, what are these doing? These are giving you your pullbacks. And it's these areas where you're seeing the balanced market is where you can grab your trades. Don't try to take a trade in a unbalanced market. Look, what I'm trying to say here is if you try and take a trade, let's say off this candlestick here, it's not a good example, but let's just say you've taken an entry here off this move. Let me just grab the buy. Let's say you've seen an entry here to go long. Okay. And you're just taking a buy based on the unbalanced market being this big momentum move in the market. And sometimes straight afterwards, this can go against you. And that's when you're going to close the trade early, even take a loss. Now, we'll see this to the left in a moment, what I mean. But let's just focus on what it means to be a balanced and unbalanced market. So when we see that this is a unbalanced move to the upside, we leave an area here of imbalance. Okay, so this is a balanced market back to downside. It is a retracement, which shows me it's a balanced market, and it means I'm looking for my entry now to go long. And down here on a lower time frame, you will be able to capture those entries. Seeing it's an actual balanced market retracement, you can then look for an entry to go with the unbalanced market. So the idea of this is you're looking to capture a trade to go with that move to the upside, which shows you the unbalanced market again. The same thing again that we can see here that the market pulls back into this area of imbalance. We have a pullback, and after the close of this candle, that is a trigger to go long. Because it's shown me after the close of this candle that we have a balanced market. We push up again. Even this small candle here is showing me that we have area of imbalance. The market pulls back. Okay, after the close of this bearish candle, I can recognize this is a balanced market. I'm looking for a buy. There's your pullback into the area of imbalance, and the market pushes away. Even these small candles here, okay, they represent it's an area of a balanced market. There's no blue candles until we see this move up. Then we go into this area, which most people call a chop consolidation. It is where I class it as a balanced market. We have no move to upside or to downside until we see this red candle form. Now, before we see this green candle close, this would have been just a black candle. It's just basically an indicator that helps me identify where these imbalances are. And what we can see here is before that green candle is there, we have this nice push down. Now we had the same thing here before. We had a nice push down here, showing me a beginning of a potential unbalanced market. But as soon as we see this pullback, we recognize this is still a balanced market, and we're still waiting for the entry. We're still potentially looking for the market to go higher. No reason yet to sell, but looking at other things to help you to identify reversals. There is a reason why the market did push lower here. But we pulled back, okay? And then we have a conflicting signal here. We have a bullish move here. Show me that is a unbalanced push to the upside. But then straight afterwards, what do we see? A nice push to downside. What's that showing me? It's showing me the market as it pushes down. What is that showing me? It's showing me an unbalanced market. So we wait for the balanced market on the retracement. There is your balanced market retracement. There's a push above. And what this is doing, it is pushing above this swing high into an area of imbalance. And that is how you can identify reversals in the market. We push down. What does that represent once again? It represents unbalanced market. Again, what we see, a balanced market. Now that does continue to fall, but it's a balanced market to the downside. And we're looking for the market to pull back into our areas of imbalances, like here. So at the moment, I'd be looking for market to pull back to here for another sell to show me. And there is another strategy that I used, understanding these moves to the upside. How can you use those as areas where you can target? But if we move sideways, we have this push up. Now this is showing me, yes, it's a unbalanced push up, but if we continue going forward, we push up into this area. So look at this. We have a balanced market, small push up, balanced market. This is a retracement move. And then we have this push through the imbalance. And finally, again, we just push through, okay? And we wick through this high, which shows me a manipulation in the market, and straight away you push back down. What is that candle now showing me? Before we even see the next candle close, it shows me a potential unbalanced market again. And then we can see the market just pushes away, shows us that nice unbalanced market. So hopefully you're getting the concept here. You don't need anything else on the chart except those candlesticks. Candlesticks are going to show you everything that you need to know. So we push down, we have a pullback. Again, look at this. I push up, unbalanced move, and we're starting to see a balanced market. So what do you think this market's now going to do? It's going to go up higher to where? So we have this area of imbalance originally that's been filled. I expect to see the market take out this swing high and potentially push into this imbalance. Then we could look for another move down with another unbalanced move in the market. And that is all it is. When you're reading price on a chart, you're looking for that balanced and unbalanced moves in the market. Now, I've just shown you how you can read all this just with candlesticks. Nothing else. Yes, we've gone through marking up these areas of imbalances, looking at manipulations and things like that, but we can remove all that and you can physically look at the candles on the chart. Move up, pull back, move up, pull back, move up, pull back, reversal, move sideways, continuation. Now we have a small continuation here, which is a balanced market. There's your pullback. So that was a whole pullback to take this high, another push down. So look, it's easy to identify those moves in the market. Look, let's quickly go over to gold, as I'm just doing this video as a quick video for you. So on gold, and let's look at what's happened here in gold. Again, you can identify it quickly. Look at that, unbalanced push up and a balanced market on the retracement. What do we then have again? We have another unbalanced market to the upside, balanced market, final push up with an unbalanced market, and then we have an unbalanced reversal market. So you can see how we went up and pushed down, showing you that reversal. So as soon as you've seen this, we know we're in that bearish move. We have a balanced market all the way down. We have another pullback that is showing you this is a full pullback. This is a whole pullback. Show me it is a balanced market. And where does this pull back into? Let's mark this out. Into this area of imbalance. And we also have an area of supply there, but I'm just showing you that you can use just those candlesticks. And what happens straight afterwards? We have a big push down, showing you that unbalanced move down. So we have the unbalanced move up, unbalanced move down. So now I'm expecting to see the market to push back down with big moves, showing me an unbalanced market. So this again is just showing me a balanced market on the retracement. Where we expect price to go from here? Well, right now we can only go to two places, either inside this area, which we are now. Okay, so we could push up to take up this high, or we could go all the way up to take this swing high here. But it's more likely we're going to see this area turn into a balanced market, and we're just going to want to take this swing high, and then we're going to see that nice unbalanced push back down. So that is how you can quickly, effectively read the charts. It doesn't have to be complicated. In fact, trading, it is easy once you understand what is happening. Now, if you want to learn how you can make this even easier for you with using 2 time frames approach, then why not check out the free trading strategy class, and you can check that out right now.